Hey everybody, thanks for everybody who's already on. It looks like we've got a bunch of you already here, and it's great to be back doing a crowdcast and seeing everybody here in the chat. Feel free to post a message like Betty did and let us know where you're logging in from. It'd be interesting to see where everyone's calling in from. This is Dan Reeser. I lead our growth team at Acala, and I'm here with Betty Chen, one of our 4 co-founders. And we've got a lot on the agenda today that we're going to walk through. Obviously, it's mid-December. We're getting close to wrapping up the year, which means we're getting actually close to Acala's 1-year anniversary from launching, which is coming up in January. There's been a lot that's happened this year, and also a lot that happened last year. Launching Karura, launching Acala, winning both crowd loans. Quite a lot has happened. And obviously this year has been an interesting year for all of us who have been following crypto for a while. So
and survived a big incident. Don't forget that.
Yep, exactly. So Betty's going to get into some of the updates and trends that we're kind of seeing in the market, and then how that'll translate into where our time, our engineering time, product time will be focused in 2023. Let me share my screen and I'll show you the agenda. So like I said, we're going to go through some just thoughts on the year in trends that we're kind of seeing emerge, and then how we actually view those as opportunities that Acala can go after in 2023. Then go through a little bit, just recap current state of Acala, Polkadot ecosystem, etc. And then Betty's going to go through kind of an updated roadmap that'll lead us into what the coming months will look like. This will all, of course, be recorded. We'll put this on YouTube, and then we'll also be releasing kind of a text-based version of kind of most of what we talk about today. So you can look out for that tomorrow, most likely. So Betty, with that, I'll hand it over to you to get us started.
Cool. Thanks, Dan. Hi, everyone, for being here. Betty here. And so let's get started with the current state of the industry, and then sort of a bit of my personal view on what might be happening next year, and then how Acala will navigate, I guess, the space. Things haven't finished, have we? While we call currently post-FTX era, but I think the aftermath has yet to finish, unfortunately. There's a lot of entangled things that might get unfolded as time passes by, because a lot of those tangled entities and aftermath, they're unlike DeFi that can get ripple effect very quickly in a protocol or on-chain level. When you're talking about centralized entity and also cross-border international sort of relationships, it could take a while for everything to unfold. And they also have impact, don't get me wrong, into the DeFi space, the crypto space as well, directly or indirectly. While we've made disclosures a while ago, and so as I guess most ecosystem projects in Polkadot, that everyone have very little or no exposure directly to the FTX. But to be very honest, everyone is affected, right? So every single one of us who work in the industry is affected by this event. The most direct impact are obviously on the surface are negative, right? Because the market is in turbulence, there's trust and confidence issue, there's legal and compliance regulation challenges to everybody who's working in the industry. But also at the same time, there's a lot of light coming out of it, mostly for those who are true believers and builders of Web3. If you still remember the ethos, I think in the last year or two, when everybody's hyping the industry, a lot of those are missed or dismissed. So I think post-FTX, there are probably a few things will emerge or re-emerge as, I guess, trends in the next year or two. So firstly, I think compliance is inevitable. And centralized entities without compliance and also transparency will certainly be very difficult to gain customer confidence and also legitimacy. And at the same time, that also says much about further adoption for them as well. And then, so that's number one. That goes to any centralized entity. That could be exchanges, that could be any of the CeFi, that could be folks operating in between, right? And then the second thing is, I think over all of these events, one thing stick to people is, while this is a big hit in the industry, the FTX fallout, but it should be reinforce the value of Web3. This is exactly why all of us are here in the first place, building Web3, right? So the openness, transparency, decentralization, and very importantly, on-chain verifiability. These Web3 values should once again become the mainstream value judgment by people and by the market as well. If you weren't convinced why we need Web3, this should have another re-emphasis why it's important. And also for those who forgot about it and pivoted to a side direction, and this should be really the core of why we are here or building stuff from the Web3 end. And then the third thing, which may feel a bit uncomfortable, but everybody probably knows deep down in their stomach it's going to come, is purely using airdrop, inflated token incentive for yield farming, etc., or similar type of model to like the type of hype mechanism to achieve, I guess, an illusion of prosperity or illusion of growth may no longer be effective and probably may no longer be the main channel for adoption. I think it will still exist. It will still help early adopters, if you call you farmers early adopters, to help grow new innovation and test new innovation, but it certainly won't be the main driver for real prosperity. However, like at the same time, I think the focus will be more on creating and also like distributing real value to users. I'll talk a little bit more about that a bit later. So I think that shift of not just mindset, I think people's minds already been switched as I talked to quite a number of builders and also folks involved. That's the mindset change already, but then that will actually take time to reflect in what people are actually doing, like building and changing strategies and things like that. So I think that is a very important shift, which is a good shift because that will mean healthier and more sustainable sort of model that will emerge in the industry. Probably not in the way that you imagine, like people still throwing, I guess, 20, 30, 50% of, illusionary APY on every product that you are trying out. That could last for a short period of time just for, testing the product. But certainly, if you don't know where the yield comes from, yield might be the yield, right? So that is the third thing that I think will start to become more prominent as the post FTX saga. And then even though on the surface, right? So I'm sure many of you, probably on crypto Twitter all the time, and then being fairly depressed. I don't know if you read, the cycle of which sort of stage you are at in terms of getting through the turmoil. Especially we're still in the middle of it. We haven't finished. I probably feel very depressing and probably at the end of the world at some point. That's how you feel. And especially, like Christmas is coming, what a better timing it is to have such a big shock right before holiday season. But like for those of us who's been through maybe a couple of cycles like this before, it feels way worse, right? Because, Bitcoin used to be, at $4,000 at one point. It feels more detrimental then, it dropped even lower in the previous cycle, right? So if you've been through this, and then you've if you've done concrete things throughout the cycle, you know kind of like deep down where things are heading, which is back at some point. As long as there's real builders, as long as there's real innovations, as long as there's real adoptions, right? That's where things are going. However, this time along, even things look pretty horrible on the surface, right? If you stay in crypto Twitter all the time, that's how you feel. But actually, not everyone is retracting. So for institutions, corporations, they actually have ever more clarity on the future direction of digital currency and the use of blockchain, especially tied to the use case of in the institution, not necessarily financial institution, that's very interesting, but also just corporates. It's a bit like when the internet shift happened, News Corporation, some of them didn't see, they will get replaced and they carry on with the old way. But some of the news corporations or agencies, they make a huge transition into a digital platform, completely transformed how they do business. And then you can see some of the Web2 companies and normal corporations that are making the Web3 shift, like seriously now. So I think it's a matter of time to actually for them to choose the right channel, the right backend or platform to deploy resources. So I think that probably is for a very long time where the Acala's vision actually sits in, right? So for us, you can see Acala is not positioned as a generalized platform, like the EVM platform. We were never like that. So we've always positioned ourselves as a application chain, and we are specialized and customized platform that are building this open platform that are more accessible for financial services or corporations or institutions to be integrated with, right? And this is the power that we are delivering. And this is why we've been pushing hi-fi, so hybrid finance or institution DeFi concepts, and then trying out different ways of integration. And then, I think the time has finally come. It will take some time, but I think one is the awareness. Second is the sort of the readiness of these parties. Usually they take a much longer time to go through the phases of understanding, adopting, trial and error, and then finally arrive at a point where maybe some new products will come out. So, and then it's important that for Acala, that's how we position ourselves as the financial infrastructure for Web3. And this means we are very well at the stage become the backend of many of these institutions and also businesses that are going to enable their Web3 component or transition into a Web3 corporation. And then while they are having their front as a Web2 accessible application, probably compliant or hopefully compliant, but at the back end, you still need open platform, open ledger that actually provides accessibility and verifiability on chain, and also have the customizability that are able to enable all of those commercial and also compliance requirements that are needed. And that's exactly where Acala is at. I'll probably talk a little bit more about the general direction for us a little bit later after Dan's slides, and then we can go into a bit more detail of that.
Cool. So I wanted to go over just a couple, 3 slides actually, just for some data and updates around just general kind of adoption, use cases, integrations for Acala and around the ecosystem. One stat that I wanted to start with is we don't measure everything we do, of course, on TVL, but just as a team who works in the DeFi space, it is one metric that people tend to look at. So this is as of I think late November, so a couple weeks ago, and I think it's still around the same. One thing that's definitely a positive is the Polkadot ecosystem in general. When you combine the Polkadot ecosystem teams, we're doing very well, kind of overall when you look at the ecosystem. We need to make a chart of kind of Polkadot and how Polkadot is kind of performing in comparison to other ecosystems. But I know it's top 10, um, and performing very well in terms of just the amount of value that's locked and being utilized on these chains, whether it's application specific chains like Acala or Hydra, Mangata, or EVM chains like Astar, Moonbeam, etc. The other thing to keep in mind, 1 second, is on Polkadot, a lot of the teams are focusing on, of course, cross-chain communication with other chains. This is part of the reason why a lot of teams, including Acala, even built on Polkadot to begin with. Polkadot is providing the security for Acala's chain, but it's also equally as important providing cross-chain interoperability with all other teams that are built on Polkadot. The other really important part about cross-chain or XCM is that this is a trustless and decentralized bridge connecting these chains together. It's not a centralized chain that could be potentially at risk. So this chart is actually showing total cross-chain communication messages sent between parachains on Polkadot in total, so inbound and outbound. Give me 1 second, my headphone's actually dying.
Well, while we are waiting, didn't expect that. I had a power outage today, and then had the outage of the headset. But basically, if you observe what's been happening for the interchain within the Polkadot ecosystem, it has been developing quite a bit ever since it's launched earlier. And then there are many channels that have been opened, bi-directional channels, but there are also more underway. And I'm sure, Dan will provide more stats on it. But one thing I would say is this type of multi-chain sort of channel via XCM is only the, initial stage that we'll see at the cross-chain arena. Because if you think about it more from a security perspective, when you connect chains together, it's almost like you establish a foreign relationship between two countries. Each chain is like a nation that has its own economy, its own, risk, maturity. Right now, XCM included, almost all bridges, when you are cross with each other, values are free flow to each other, and there's no limit on any end. And I think the next sort of development, well, at least what we are interested in, is to see beyond pure simple XCM, whether we can actually establish more sophisticated, like a bilateral agreement between the two parachains, or two like nations, if you like policies on top of XCM. So that's one item that we are sort of exploring, because of course you think, why am I even saying this, right? But if you actually experience this, like in the AUST incident, you realized while GAF have planted the seed on governance as well as recoverability via substrate, right? And then Acala also built a bunch of tooling on top of the raw substrate that are allowing us to respond to incidents like this. And GAF come up with all of this because of the $100 million incident with Parity a while ago. That's why he built all of this stuff, right? And that's why it was and is still governance and all of this stuff as a priority for substrate and Polkadot development. And then, we experienced that firsthand as well. So the next level thing to do is once these channels open up, you want to understand the risk maturity of each chain, because once the incident happen on one chain, you might well have the technical ability to respond to the incident within your jurisdiction, let's say on Acala, right? However, any value that gone outside of that, like to other chains, then you immediately, the recourseability has dropped. And that has to be factored in terms of the sort of the, for example, quota or amount of the value that are allowed to be floating into each other, right? So right now, there's basically everyone is Wild West. Once you flow out, there's no control, there's no agreement, there's no bilateral sort of way for governance to agree upon certain ways to deal with incidents in a multi-chain environment, right? So we have all of that in the real world, and not in a perfect way, but I think it's something that's feasible that we explore on the on-chain environment through XCM and through cross-chain governance will be something that will be valuable, because when we talk to real institutions that are willing to put $100 million on Acala, they're not asking 20% or 30% APY. The question they're interested in is what's the recourseability? In the world that they operate in, legal recourse work very effectively, right? They can always sue someone, they can trace the funds back, but on a blockchain, and that's why there's still a lot of hesitation or barrier for those guys to actually come in a big time. Is what mechanism, reliable mechanism you have when things do happen, right? So they are very interested in recourse ability, especially technical one, because from experience, like if you look at all the incidents that happen, legal recourse seem very inefficient. However, we might be one of the first chains that are able to execute on-chain governance and technical recourse ability, and that's probably pioneering the field. And I think some infrastructure work that will benefit the entire ecosystem will actually up-level Polkadot as an ecosystem to be ready for this wave of institution adoption and readiness and the real security level for any debt that are being built on top of it. Otherwise, we will stay in a stage of early adoption, right? Only the farms are open, but not real users are coming. So so that's just my improvising on Dan's slide.
I got my headphones to work and then I couldn't unmute myself. So finally I got it to work, but you did a lot better of a job on that slide than I would have done. So I'll just take us to the next slide and you can get into roadmap stuff.
Cool. So there's three directions I think that we are tackling at Acala. So just in general. So in the next I guess 6 to 12 months, the three sort of directions are one is we're doubling down obviously on native DeFi innovation, because that's who we are. We build up Polkadot cross-chain native stack, and then it will certainly be quality over quantity, but we'll continue to build more building blocks, both ourselves as well as in collaboration with other teams. For example, we've incubated other native protocols like Tapio, that's working on the synthetic assets side of the things that are basically so if you look at our stack, are very much low level, like LDOT, AUSD, and also the DEX are very, very low level. Like you guys, when you are using it, you are already super early adopter that are at the very forefront of the tide. However, when you actually think about the end product for everyday user, that are a bit removed, right? So what Tapio is building is like a middleware. So they basically synthesizes different type of dot that into a product that are very easy to hold and very easy to trade, probably a better form of holding dot, as in the form of T dot, right? Basically all the yields are aggregated, and then it's easy way for you to, I guess, to view it, to track it, and then also to to do anything with it, right? So it's a level up. So basically, this vertical sort of stack natively that are innovating on the Polkadot ecosystem is going to help build a product sort of stack. Continue towards the user end. Once they get to the user end, then this is where distribution comes in, right? And then so then the sort of the second direction that we are heading is institution DeFi. This is where the funnel or the channel that comes in, where I think entities that operate like a black box will lose their competitiveness, right? If you can see like CeFi or any of those sort of type of entities. And then what's missing, right? So right now, everyone is throwing this proof of reserve, right? But it doesn't quite prove, because you can see on-chain transaction that borrow reserve before the proof of reserve happen. And then there's also liability that hasn't been factored in, which is the most important thing to figure out whether you are solvent or not. And a whole bunch of other stuff. But all in all, it's basically missing a infrastructure that allows real-time transparency, on-chain verifiability, right? So then Acala is basically positioned as that transparent, open backend to integrate into these platforms. And then we are doing that with, one of the product sets that I'll go into a bit more detail is Liquid Staking Alliance, that's with Coinbase and also Kraken. And with that, the front, obviously those are compliant, regulated entity that are providing products and services to everyday user that are way beyond just the sort of the smaller crypto early adopters. But at the back end, we are providing the protocol, providing the traceability, and everything that the user is doing is not only claimed to be safe, but also verifiably safe on the chain. That you can track and you can also verify. I think that's sort of the hybrid model, as we call it, like hi-fi or institution DeFi, is really the next thing when we output the stuff that we built from the pure native DeFi stack. And you can very well see, let's go to the third direction. So the first is native DeFi, and then the second is the institution DeFi, and then the third is where security comes in. So we're up leveling. We're already doing that. You can already see we've been outputting some of the upgrades as well as some of the tooling in the security space, and also the capability for incident response. And like most incidents that we've seen in the past year or two can only recover a small amount of the losses, right? But in our case, there are many things that collaboratively done, both governance as well as technical, as well as other aspects, that we're able to recover majority of the losses, vast majority actually, mostly due to technical recourse that are built into Acala, and also the ability to partially contain the incident within certain part of the chain. During the incident, the Acala chain is still operational, still producing block, and liquid staking is still operating, while the part that are affecting AUSD are paused to be able to deal with, right? So there are a lot more. So as we talk to like partners and institutions, there's a lot of interest, and people eyes lights up, because it wasn't possible. Technically, it wasn't actually possible on other platforms, but fortunately and also unfortunately, we built it, and then we experienced it firsthand ourselves. And there's certainly a lot more we can do and innovate, especially, need to collaborate with the cross-chain community, because the part that's still weak is the part that's gone beyond your own jurisdiction. When you go cross-chain, like whether it's XCM or through any other type of bridge, that's the weakness that happens. So that's certainly an area that we want to put a bit more dev power in, and then to kind of like level up the entire cross-chain sort of security. And then with that, you can see the trickle up effect of how that will happen, because the DeFi part of the stuff will be innovation powerhouse. It will continue to produce DeFi building block, product, feature, and then be tested in the DeFi sort of arena. And then on the institution side, this is where the distributing of value comes in. Those DeFi products can then be packaged into DeFi solutions that have the part that the peripherals that have to bolt onto it to build commercial customization as well as compliance customization. And then that really funnel in is the, I guess, a scale up liquidity that comes in from that part of the world, right? And then this is where adoption comes in, and also like a lot more liquidity that comes in to the platform and protocol. And then if we use again the liquid staking example, the output of that institution solution is a byproduct, a derivative called LS dot, right? So the liquid staking dot. And then with this new token, this is a DeFi native component, right? So basically you have liquidity that comes into the platform that will stay on Acala and also Polkadot. And if it's on Polkadot and it's in the form of token, then this is liquidity that can flow back into the DeFi ecosystem, not only on Acala, certainly on Acala, but also cross-chain onto other chains, other applications, used as collaterals or used as trading assets or any other form that people continue to innovate on top of that stack, right? So you can see this is a trickle up where innovation comes in, distribution, and then liquidity comes back to Acala and Polkadot ecosystem. And if we can do this right, then this is really will be driving, a sort of like a renewed or empowered sort of will that drive adoption. But of course, what I can see is we are still very early, because even this model that we have been working with all these parties, there's different ways people think about this type of integration. But I think we finally got something that's very tangible and also very grounded, that are able to put out some product and solution that are being used. And then once the wheel starts spinning, and that's where things start happening. But we're still very early on that journey of adoption. So but nevertheless, that's sort of the direction that we are heading. And then the last but not least is governance. I think the governance V2 is what Polkadot has put out, and it's certainly a significant step up of the current Polkadot sort of governance system. It basically opens the doors and lowers the barriers, right? But it probably introduced some chaos as well along the way. And you cannot not expect that when you introduce something new. But nevertheless, I think that is a significant step up in terms of robustness and also participation in a way for governance in the next level. And from our side, we certainly are following the governance too on our stack as well, but also we'll have Acala's flavor to it. And further along governance too, we also want to see cross-chain governance. So basically, multiple chains governance can collaboratively decide and also execute stuff on chain. This is important because once you are connected through XCM, you no longer operate in a vacuum. Everything that you operate, there's a risk exposure and other type of exposure to each other, right? So if you don't have a sort of the cross-chain governance body that are executable and decided on chain, then there are many things that when things do go wrong, and then when certain decisions do have to be made by two different communities, then that's where the roadblock will happen. So I think there's a lot more that we can contribute in that regard as well, in addition to just continue the pathway of governance too. So so that's basically the sort of the directions that we are kind of like heading into. So all in all, I think next year will be a year of building. You will see us probably relatively low key as we have been. But there's a lot of these products and also services, if we can actually build it and then continue to actually roll it out to our partners and also to the market, then when the tide turns, when the market turns, then we'll be in a very good position to actually come back again, right? So, but I think no better time is to be building at a market like this. Well, if we look back into where we started, 2019, it wasn't exactly a good market. It was like pretty down, pretty bearish. And it's never a better time to be building in a bear market, because there's less noise, there's less hype, right? And also no throwing free money around anymore. So so that's basically shedding some lights on the building blocks that we have. There will be some announcements yes.
So you gave the kind of an overview, but I think it'd be helpful for people to see like slide by slide, just broken down into the individual bullet points. I know you covered some of these, but do you mind going through these 4 just to wrap up this section?
Yeah, definitely. That's the next thing I want to do. That direction is more give people a highlight on direction, because under each of those direction, there could be multiple initiatives and even tasks or projects that we do. Here are just a few examples to be a bit more concrete on for people to know what we are already built. From the security and monitoring side, we've already, I think, announced the chopsticks and released the code for it, for a testing tool for multi-chain development. As we realized, and then I think some people already experienced on Kusama governance, sometimes you have to go through multiple vote because something wrong that wasn't being able to test, and also picked up in terms of configuration and other type of bug. And this was picked up by chopsticks, right? So you need both a unique canary network, but you also need a chopsticks-like real testnet that are exactly the same as the environment that you're going live into. So this is certainly one of the stuff that came out in the last couple of months. There will be more, I guess, workshops and stuff so that people can get a real hands on it and be able to start using it. If you are building, I guess, parachain or very deeply involved in verifying on-chain proposals, then this is certainly a tool that you want to get your hands on and provide feedback to us. And then we look to have this project gradually also become a community project. So feel free to contribute and provide feedback as well. And then the next one is XCM policy palettes that I very lightly touched on before is when you have XCM bridges, you are basically open yourself up wide open, right? When you have two nations have the foreign policy, you usually will establish what are the quotas of exporting fish, exporting dairy products. When there's crimes, what is the extradition agreements and things like that, right? So we have all of those in the real world, but we have none in the cross-chain world. So this is like step number 1 to build a base palette that can install some policies such as rate limit, right? So depends on the trust level or the risk maturity of the other chain, that you could actually set a rate limit on how much value that can cross to either side to actually help contain, I guess, the potential risk that can incur on either side. And then that can certainly grow into a more mature product as more policies are being developed, and then be able to implement it in the policy palette. But of course, one thing that's not put on the slide, but something that's more R&D type, as I mentioned, is governance, like cross-chain governance on and above this, right? So while this is installed on Acala, but also it can be installed on all the other parachains within the ecosystem. And then also the next step is like, how can you mutually be able to execute, like vote on stuff and execute certain policies is probably another topic. So yeah, and then at the same time, there's also a whole bunch of monitoring work going on as well, but it's not on here. But yeah, so let's move on. Yeah, so the next thing that a couple of things, like probably more as examples that we are also building is Acala dApp 2.0. So there's a refreshed UI for cross-chain dApp. So we're gonna have one dApp that you can actually navigate onto multiple chains. There's also refreshed sort of stats and reporting for people easier to manage their portfolio and things like that. So that will probably be in Q1 or Q2. And then another new thing that comes on is sort of helping with liquidation process. So right now we already have a more advanced liquidation mechanism. We have 3-level liquidation. So the collaterals are liquidated on the DEX to start with, so that you can have quick liquidation before price fall further, before it goes into auctions, right? And then you have the auction to catch whatever that's not being able to liquidate it. And then thirdly, it's being absorbed into the protocol. And then now we're adding the fourth one, that's before the auction happen. Not only you can liquidate on a DEX, but also you can liquidate in a smart contract. So in a smart contract liquidation pool. So for example, this one is we're working in collaboration with Kujira, who's running their own chain now in Cosmos, but their bread and butter originally was running liquidation pools, where everyone can actually put in a couple of dollars of AUSD and then participate in the liquidation, and then all the earnings come out of it, right? The discounted collaterals that they purchase that can actually share the profit together as a group, as a liquidation pool. Yeah, so something like that is a hybrid sort of product development. That's the base protocol are still in Substrate, but then the Kujira contract is an EVM contract, right? So that taps into the Substrate protocols. And then further than that, there is also real yield products that based on DOT that actually extracting real DOT yield from staking, trading fees, and other sort of solid yield. This is a collaboration between us and also Tapio to be doing this, right? And then probably also innovation around LC-DOT. So for those of you who participate into crowd loan, there will also be things around that that will be building to help you transition when the crowd loan finishes. And then there's like other type of pathways that you can use your LC-DOT or convert your LC-DOT. And then the last one on that list is also a research and development project that we do with Substrate. Is an interchain proof oracle network. So we've done something for our oracle palette that allows different oracles that are oracle providers are able to feed into the system and providing a more robust sort of oracle feeds. But this one is more for cross-chain that are able to provide trustless state reading. Not that easy, surprisingly, in the Polkadot cross-chain ecosystem. But we have a mechanism that we can actually do something like that, which will be useful. So this, once we develop this product, then it can actually, be turned into a security product for the first category, where you can do proof of reserve, and then you can do cross-chain smart contract execution and all the fancy stuff. But before you can actually do that reliably, this is something that we are building with Substrate. So yeah, so quite a number of things that we're building at a low level. Yeah, so and then this part is more of at a slightly higher level, where we turn all those lower level technical stuff into products and also solutions, more of like solutions. So I already mentioned the institution liquid staking, so I won't talk too much about that. But once we have the implementation and for testing, we'll certainly announce that and have people try it out. And then at the same time, we are still working with current.com with product integration as well. This includes the liquid staking product, but not limited to it. So it's going to be a very interesting crossroad between this institution sort of solution and then with our existing partner joining as well. And also we're also venturing into some non-DeFi stuff, so non-financial related product suites that are based on loyalty program. I think that's a very refreshing field to be able to work on projects that are non-DeFi specifically. Of course, eventually, once the product is launched and then there's people trading the loyalty points for corporations and enterprises, there is always a financial element to it, but the main goal is not quite the same as what we have been building in DeFi, but that is certainly a good sort of synergy on our platform that are able to customize the solutions for these enterprises. So those are a few sort of areas that we are exploring and also working on. So I think that we have already touched on, and also so there's a renewal of Acala parachain that will be self-funded in 2023. So nothing too surprised or too exciting of that. It will just be business as usual, and then you get swapped to a new parachain slot.
Great. So that's it. I know we have a couple people, probably a lot of people in the chat who had some questions that they wanted to get answered. So Betty, I'll have you just take a look through those, and we've got about, I think, 9 minutes.
Sure. Let's just address the elephant, right? I think people have been asking the AUSD peg. I think we've answered those previously in other sort of podcasts or in writing as well. But for those who missed that, is basically there are sort of two values of AUSD. One is the hard value. The hard value actually comes from looking at what the collateral value backing the AUSD. So right now, I think we've also put up some information on how you can individually verify circulating AUSD versus how many collaterals in the system. So once you do that, then you will see all circulating AUSD are fully backed, right? So there's way more collateral there than AUSD. So what that means is if you are a vault owner, then you can get AUSD on the market, of course, hopefully equal or less to $1. And then you can chuck it back into your vault, and then you can take any amount or all of the amount of the collateral out of the vault without problem, right? Everyone can do that. So that's basically the health of the lending protocol, because end of the day, AUSD, just like Maker, in a different way, just like Aave or other lending protocol, it is in a way that you have to look at how solvency it is, right? So collaterals versus the circulating supply of AUSD. So in that part, that's the hard value. And then the elephant there is the market value, right? So there's also the market value of AUSD. And then right now, the market value is low, so this is running at a discount, right? And one of the reasons for that is the in equilibrium post-incident, the post-AUSD incident, because as I mentioned, there's once AUSD goes cross-chain, there's very little thing that you can do. So we've collateralized all of those AUSD from ourselves. So those AUSD are basically already at a discount when it's being obtained. So there's an imbalance between the supply and demand. So the market value part is mostly work on supply and demand. So right now, I think the market is gradually healing itself by absorbing the excessive supply into the system. So essentially, if you are a vault owner, I am a vault owner, then I'll be getting some discounted AUSD, because if AUSD is fully collateralized, it's definitely going back to $1. Well, of course, it's not financial advice, but then you are kind of like getting it cheap to pay back your debt, which you actually borrowed at $1, right? So if you're a vault owner, you are doing that. And of course, we've been asked by some liquidity providers as well to be able to do that as an arbitrage opportunity as well. So that's basically the situation of AUSD. And then it will take time for that to go back, because what happened is during the incident, those AUSD fell into the hands of a few accounts. You can see the trace report. So it's all in there. You probably know all the addresses there as well. And then you can probably follow the track where it's heading on Moonbeam and probably other DEXs as well. And then you can also see the flow after we resume on October, AUSD flowing back onto Acala, but not all of them, right? So basically we are in the process of the supply and demand, going back to equilibrium. But it does, this is a free market, right? You can't hold a gun and get the people to dump or get the AUSD back into the market, and so it goes balanced. So this is more of like a push and pull sort of process to let the AUSD sort of fully absorbed back into the market, and then it's balanced again. So expecting to take time for that to go back, but we are not concerned. That's why you don't see me yelling across crypto Twitter to say anything about it, because even everybody runs, like all the vault owners cash out, the protocols will still run. So there's not much we can do as to actually yell about that and to instill sort of illusionary confidence into people. This is more of a market sort of behavior for it to go back to equilibrium. So I'm still observing every day, and to see it to kind of like going back into the packing track as well. But of course, the macro environment is not helping, but mainly this is an equilibrium problem. So hopefully I've addressed that one. And then the second elephant is KuCoin. And this we also addressed previously. So the main thing is anyone, right, individual protocols, as well as centralized entity, any centralized exchange included, that integrates with Acala, right? With our tokens, with AUSD, with any protocols, they are free to do whatever they want, because all the transactions are open and transparent. You can just call any of them, you can transfer, you can do whatever with it. So it's really not in our sort of power to stop those transactions, right? Because post October, the first week, every transaction that were paused or operation that were paused are already widely open. And also all circulating AUSD are fully backed. And then there are AUSD that are being frozen. I think there's also a list floating around somewhere that you can see. You can put it yourself as well from Polkadot.js, which accounts has frozen AUSD. And they are all under sort of legal and also police investigation. And other than that, there's nothing else that that's that you can do more about it. So it's really up to whoever integrates with Acala to make their own judgment how they want to do it. You see some protocols, they operate all the way through, right? And then of course Acala DEX that are directly affected, they were paused for a period of time and then they reopen. And also when Acala DEX reopened, it didn't open trading, right? It didn't make LPs suck. It actually opened withdraw first. So you can actually take all your money out first. And then the trading begins, and then everything else resume, right? So when the things that are within sort of our jurisdiction and we can make recommendation, that's the approach that we take is, what is the best way for users, and withdrawals is number one that you can do. But when it comes to other protocols integrate with us, we have very little power to that. We can suggest, but there's nothing we can do. And then when it comes to centralized exchange or other like entities that integrate with us, it's really up to them how they want to manage the transaction as well. So that's all the information that I'm able to disclose. And you can certainly verify that via Polkadot.js, or perhaps if you write code, that would be easier to pull all those data out as well. So yeah.
Cool. We have about a minute left. Are there any other questions to run through?
Yeah, sure.
I'm not sure if there's any. I think you've answered most of these.
Yeah, a lot of them have.
AUSD sending from Acala to Karura.
Yeah, so we were about to do that, and then the incident happened. So right now, the state of that is the bridge is still there, and then it was paused for risk review, because the risk exposure, remember, there is a foreign post there to specify exact amount of how much AUSD can be crossed from either side, and that was given by Ganglet. That needs to be reviewed after the incident. So we'll have to adjust the numbers and then also figure out whether there's extra security measure we need to put on for that to happen, because the underlying bridge at the time that it's proposed is using wormhole, right? So that is extra layer of risk, obviously, but then it's also a risk for the quota that we put in. So those two are being looked at again. And then in a post-incident like us, we're super lucky. Like I have to say, like really grateful and really humble experience for us that are able to actually come out of this like really huge incident. Like it's not small amount. Of course, there are a number of other big incidents happen right after us, and you don't see much exposure, but then it is a huge incident. But very few actually come out without a scratch, right? So and very few actually come out of a big incident like that. Most teams, I've actually met folks who's heavily involved in trace in those big incidents, like chain analysis and a few others as well. Also met with teams who's involved in those incidents. Usually you are in those big incidents, you recover, just tiny little bit amount in the mercy of white hat, and very inefficient legal recourse as well. So so I have to say, thanks to Gav, and also thanks to the tech that we built on top of Substrate that allowed us technically that are able to recover. But if you've gone through an incident, you will be thinking and act like Gav. Yeah, I appreciated Gav for building Substrate and also the governance the way that he's built from day one. That's why we are in the ecosystem. And even though there's so many noises outside talking different things about Polkadot, we are still sticking around and then building more and more into the ecosystem. And once you bring through those really hard challenges yourself, you realize why you have to build those hard tech and spend the time at the first place, because that's how a lasting product will become, right? When the time comes, I think Polkadot is just waiting for its moment, right? Operating in Polkadot is more like operating in a 3D space. It's very different from operating in a 2D, like more of like an EVM stack. It is fast, it is easy to innovate, but there's a very limit to a 2D space, things that you can build in that space. Whereas 3D, because the mind is all open, it's all in a different dimension, you think very differently, you operate in a very different space, and then the value takes time to actually being extracted. And every one of us here, like you guys included, are basically poking, building, experimenting, and trying to figure out where is everything fits in the right point at the right time, the right value, the right user group, and then boom, and that's where, like what the AI is currently is exploding, right? But we are way before that time. Is we are still in this very vast and powerful technology, and trying to build different stuff and trying to see where the focal point is for things to explode. And then there are a lot of good builders in the Polkadot ecosystem. So and every day there's like new ideas that come out. So fairly confident that as long as we all stay and we all build, it is gonna have its time. So yeah, so I think patience is also most important theme in 2023 is be patient, and just do real work, be patient, and then you will reap with fruits. So yeah, so that's that. Sidetracked quite a bit as well. So sorry.
Yeah, I know we need to run. So we had, it looks like around 280 people. So I want to thank everyone a lot for coming and spending the time to listen to what we had to say, hear what we have planned for 2023. As Betty said, next year is going to be a lot of building, a lot of patience, and also just keep supporting each other. We're all in this together. We're all doing our best. I see there's a lot of Polkadot, there's parachain teams in here. There's a lot of users, a lot of builders. So it's great to see everyone here. And yeah, thanks for coming. We appreciate it. We'll be putting this up on YouTube. And then we'll also be releasing a text version of everything you saw today, which will be coming out tomorrow. So thanks everybody. Good to see you, and we'll see you again soon.
Thanks everyone.